And finally, we have capital maintenance. The purpose of capital maintenance is to protect the shareholders and primarily the creditors in a situation where the business has net liabilities. The contributed capital must be maintained in order to have a buffer fund, which is the net assets of the business equals to the stockholders' equity or capital. The stockholders' equity is composed of the share capital and undistributable reserves. These undistributable reserves are share premium account, capital redemption reserve, accumulated unrealized profits, less accumulated unrealized losses, and any other reserves identified as undistributable in the company's constitution. Capital maintenance is also called capital recovery or return of initial investment. It is an accounting concept which is based on the principle that profit or income is only recognized after full recovery of costs or its capital has been maintained. The costs referred to here are those associated with the operations of the business during a selected accounting period. Capital maintenance excludes cash inflows and outflows that affects the net assets, such as sale of stocks to shareholders and dividends or other distributions. Let's take a look at how capital maintenance works. We have to compare the capital at the end and the capital at the beginning of the period. If they are equal, then we are successful in maintaining the capital of the business. It is said that profit is recognized only when there is an excess in capital at the end and the capital at the beginning. So therefore, profit is recognized when there is an increase in net assets during the period. There are two types of capital maintenance. One is financial and the other one is the physical capital maintenance. Financial capital maintenance deals with actual funds from the beginning and the end of the accounting period. It does not include the value of other capital assets. So in order to compute for the profit under the financial capital maintenance, we should compare the net assets at the beginning and the net assets at the end. If the net assets at the end exceeds the net assets at the beginning, we have the profit. Under the physical capital maintenance, it is not concerned with the cost associated with actual maintenance of the tangible items, but it is concerned about the ability of the business to sustain cash flows in the future by maintaining access to income-generating assets in use within the business infrastructure. So in order to compute for the profit under the physical capital maintenance, we have to compare the productive or operating capacity at the beginning and at the end. If the operating capacity at the end exceeds that of the beginning, we have a profit. Under the financial capital maintenance, the cost or the items are measured using nominal monetary unit or units of constant purchasing power. And under the physical capital maintenance, we use current cost.